Okay, so let's go ahead and start off with the 0.618 level. Looking back on this move here, if we go from relative high to relative low, basically what you'll notice is the 0.618 level acts as a turning point in the market. Now, what that means is the 0.618 level can be used as an entry point for a continuation of the prior move. So if you have a downside move, you would wait for a retracement of around 0.618, go ahead and take a short position there and let that ride to the downside. This is actually a very strong level in the market. And if we're tracking a downtrend, it acts as a very strong level of resistance where we tend to find the most resistance before either surpassing it and breaking through and breaking that downtrend and breaking back to the upside, or it bounces and rejects off of it, kind of like what you're seeing here, and moves downward. As you can see right here, this is a very strong example of it already as an entry point to the downside. And if we go ahead and look and just say, look at the entire move overall, you'll notice that we're now tracking this overall downtrend. And if we take a look at this retracement here, you'll see the 0.618 acted as a very strong level of resistance that sent the price back downward. Now here we are just looking at a downtrend, and we will get to the upside shortly after, but there are some things that you want to look for going into these levels if you want to play it to the downside. If we go ahead and take a look at this move right here, basically what you want to see is decreasing strength going into it if you want to play the downside move. So how you can do that is something like the RSI. If I go ahead and pull that up, notice here we have the RSI here, we have the RSI. And if we just take a look at the move that is occurring into this zone, we'll have two higher highs that are being made. And if we look at the RSI, we'll notice that two lower highs are being made. This is, of course, going to be bearish divergence, which typically results in a reversal downward. And when you see divergence going into the 0.618 level, it makes for a very strong shorting opportunity at this level. Another thing to look for at the 0.618 level, especially during a downtrend, is let's say if we take a look at this 0.618 level here, where we go ahead and retrace to it, you want to look for those overbought conditions. And the reason for that is because when you have overbought conditions, it's unlikely that price is going to continue through at that same rate and is very likely to reverse. So if we take a look here, we'll see those overbought conditions at the 0.618 level. And these overbought conditions actually did result in a bit of divergence as well. Notice we have two peaks here. We have a first peak right around here, and then a second peak that just above the 0.618 level. And then if you go ahead and take a look at the RSI, you'll notice that we get some divergence there. Overbought condition followed by divergence at the 0.618, very strong opportunity to go ahead and go short on a position there. And the reason for that is because first, already with the divergence, that is a strong opportunity to go short. But also, since this is going to be such a strong level, as it is a turning point in the market, that is another opportunity to go ahead and just take a short position right then and there. And we'll talk about the stop loss and take profit in future videos, but right now we're just showcasing the 0.618 level as a turning point. All right, so let's say if we wanted to track an uptrending move. See, we have an uptrending move here, and say if we wanted to track this retracement back downward to look for an entry point during a pullback, simply grab your Fibonacci retracement tool, go from relative low to relative high, and notice this yellow line right here, which represents the 0.618 level, acts as pretty much a perfect turning point before we see a reversal to the upside. And if we go ahead and look at the next move, say this next impulsive move right here, and we're trying to track the retracement there, simply go from the relative low to the relative high, and we find that the 0.618 level bounced pretty much directly off of it in terms of price, and we see a move occur to the upside. And it does help to have the magnet tool turned on when you are doing this so that you do get those exact points of low and those exact points of high. But notice here, the 0.618 level acts as a very strong turning point in the market. And if we even take a look at the next pullback that occurs, taking a look at this uptrending move and trying to track the retracement of it, you'll see that once again, the 0.618 level acts as a strong turning point. So along each of these three streaks, if you would have entered along the 0.618 level, you would have profited quite nicely on a move back to the upside. All right, so let's go ahead and talk about some confirmations for an entry if you're tracking a retracement to the upside. So we have this upside move right here. And if we want to track this retracement back downward, go from relative low to the relative high, of course, going from left to right. Notice we do have that finding of support along the 0.618 level, but how can we know to go ahead and take an entry there? What I like to do is always look at the RSI. That is a very strong indicator to look at. And if we take a look here, the same thing that we saw earlier with that divergence, we have two lower lows that are being made here in terms of price along the 0.618 level. And then we have those higher lows that are being made on the RSI. And of course, when we have higher lows on the RSI while seeing those simultaneous lower lows on price, that is going to give us bullish divergence. And as we know with bullish divergence, what we're looking for is that trend line break to go ahead and take the entry. Go ahead and take that entry point right there and just continue and let that play ride to the upside. As you can see, this turning point here, the 0.618 level already is a very strong turning point in the market. But when you pair it with something like divergence, it acts as a very strong indication and confirmation to go ahead and take a long position there. Another way you can use the RSI when you're looking at the 0.618 retracements, let's go ahead and pull up the retracement here. We have this uptrend and we're watching the retracement back to the downside. If we go ahead and pull that up, you'll see the 0.618 level acted as a very strong level of support. And when you're seeing that this level of support has very deeply oversold conditions on the RSI, that is going to be another very strong opportunity to go ahead and take a long position. And of course, we know with the RSI, when the RSI is showing very strong oversold levels, it's showing that the price is unsustainable to keep moving at the current rate and is likely to have a pullback or reversal of some sort. So when this is occurring at a key level like the 0.618 level, very strong opportunity to go long. And as you can see here, we do get a very strong move back to the upside. And of course, that does work on the down and up direction. We already talked about retracements to the downside and the 0.618 level there. But during the uptrend, the 0.618 level, when you are seeing it with those oversold conditions on the RSI, a very strong confirmation to go ahead and take an entry there and play a move back to the upside. Another example right here, we have this very strong uptrending move that went ahead and created that bearish divergence right around here. So it did look to pull back, but where was this pullback heading to? Let's go ahead and pull out our Fibonacci retracement tool, go from relative low to relative high, and notice we get that bounce directly off of the 0.618 level of retracement. Once again, showing those deeply oversold conditions on the RSI. So when you pair these two together, you can get some very strong points of entry and very low risk, high reward opportunities. And the reason for that is, as we mentioned, a level of support, very strong level of support that is, paired with these oversold conditions is going to very likely push the price of the asset back up. And if you go ahead and take an entry there, you can ride the wave and go ahead and take profit on the way back up. Okay, let's go ahead and take a look at this example here. We have a downside move that we can then track the retracement to the upside of. So if I go from relative high here all the way down to the relative low, you'll see that once again, this 0.618 level acts as a very strong level of support. But how could we have known to go ahead and take a short position there? Well, that's the power of the RSI. If we go ahead and look here, we do have 3 consecutive highs being made. And if we can even draw a lower trend line to go along with it, get a bit of a wedge pattern occurring here. And if we look at the RSI, you'll notice that for each of these consecutive highs, we get a lower high on the RSI, and that is going to tell us that bearish divergence is occurring. We get that breakout of the lower trend line, go ahead and take a short position there and ride that move back to the downside. As we know, the 0.618 level is going to act as a very strong level of resistance right here. Plus, we're seeing that bearish divergence leading into it, so it acts as a very strong opportunity to go ahead and take a short position and ride that continuation back to the downside. But yeah, guys, as you guys have seen with each of these examples, the 0.618 level not only is going to act as a very strong level of support, if you're tracking the retracement of an uptrend, or a very strong level of resistance if you're tracking the retracement of a downtrend. And if you pair this with the RSI, you can get some very strong opportunities to go either short or long using the different methods that we have just showcased here.